I think we're facing a perception problem. This is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community.
Your perception may be the market finished down for the month of May, but it actually finished up just a little.
So this emotion wells up in people that they have to stop what's happening and therefore sell. And when they do so, they feel better by getting out. And yet what they don't realize is the actual exiting creates a permanent getting out of the market. And so therefore, if the market recovers, if the market goes back up, if everybody's overreacting to this, those that got out have now missed or can miss the recovery that tends to happen. And the perception is when the market goes down, the value of the underlying companies that this market represents, the businesses that are selling products and services that we're waiting in line for, we can't get enough of, they can't make them fast enough. Those companies effectively have gone on sale. A sale meaning they've dropped almost 20% in value. We're in an official bear market, and this is an opportunity for those that want to either stay in their investments and ride this out and realize what history teaches us about that, because they have the right perspective of what long-term investing is, which is every now and then people panic, people overreact to inflation and war and headlines, and they get worried, and with these emotions welling up, they get to click a mouse and liquidate their life savings, and that feels good in the moment. But if and when these markets fully recover and these people don't get back in, I have had 2 decades of a career of trying to consult people that because they got out of the financial crisis, because they got out because of COVID, because they got out because of an election, at some point they have to get back in, or the very inflation that the people are panicked about will erode the value of their life savings and put them in a potential situation of running out. And so what do? You have to have the right perspective. The perspective is that if these companies that produce products and services that we all want in the last 2 or 3 months have lost almost 20% of their value, wouldn't that make them more valuable to buy now, to own now? Effectively, those of you that have not been in the markets are getting an opportunity to go make investments as if you made an investment a year ago. In a hypothetical situation, let's assume that we're making an investment that's worth $100. And you can go buy the exact same underlying investments that now you can buy them at 80. Well, doesn't that make them more valuable? But if you view it as you owned them at 100 and now they're down to 80 and you sell them, yes, you create a permanent loss. And then, quite frankly, what do? You feel good in the moment, but you may be creating a lasting regret. And the perspective I want to go back to is, yes, we have touched, look at this chart, we have touched a 20% downturn so far, and we don't know what the year is going to hold for us. But what I found is I actually found relief once we hit that bear market, once we hit the 20%. Why? Because it doesn't happen very often. And now that it has happened, to me, it's kind of like pushing a balloon, which is not made to go underwater, but let's push a balloon down 20 feet underwater. The further you push that balloon down, actually, the more force there is to actually send the balloon back to the surface, the further it goes down. And that's the analogy or the perspective I want you to have with the markets, because the more this market gets pulled down, and yet these same underlying companies that we're waiting in line to buy a cup of coffee, or we're waiting for our phone to come to us, or we're waiting for that automobile to be purchased, or we're waiting for that remodel to be done, we're waiting for all this stuff, those companies have gone on sale. And history shows that recovery can be substantial over time. And so there's a big difference between watching things week to week, month to month, and yet making decisions about money you're going to need for the rest of your life. What I'd tell you is that selling when the markets are down can be a substantial mistake, especially if you're making an all or nothing decision to address an emotion or a fear that maybe some perspective will help you avoid. And for those of you that can't buy in at these markets because you've bought in, then we have to ride them out and wait. But waiting has often been the best reward to the long-term investor, and that's what I'm encouraging you to do for the month of May. The purpose of these up or down videos is to try and bring a little understanding about what you should be doing with your long-term investments based on what is going on. And so this is Tyson Ray, financial advisor at Form Wealth Advisors, where we exist to help make life better for our clients and those in our community.